The goal or the agenda for today is to share with you a tool that we've created at the University of Laverne SBDC to help businesses do business plans. And this tool is a website. And so it's located at businessplanproject.org. It is a website, so you will need a computer to do your business plan, and you will need access to Microsoft Word because in a nutshell, what we've done is we've reverse engineered the business plan into a bunch of questions and answers that you can go through and plug in your answers. And then it completes a bit of a mail merge where it takes your answers and it plugs them into all the right places of the business plan template, making it a lot easier for you to focus on the content that goes into the plan, more so than formatting a pretty document or trying to figure out how to get Microsoft Word and Excel tables together. Even the most tech savvy individuals can have a hard time with that. But as we were talking about this website, I mentioned early as we were just getting started, if you haven't yet become a client, you will need to click our little sign up now button to sign up for our free consulting. Reason being is we can't work with all businesses. So we are grant funded by the federal government, so we can't work with businesses that aren't, well, legal, I'll say. And if, just as an example, down here under our FAQs, can you work with any type of business? For the most part, yes, but you need to be considered small. We can't work with, we're funded by California, so we focus on California businesses, but you can't be engaged in any illegal activity that under federal, state, or local law. So no CBD, no cannabis business, unfortunately. I'm sorry. No gambling businesses or services, businesses of a prurient sexual nature. So we have some restrictions, but for the most part, we can work with just about almost any business. And why is it free? Well, because we're grant funded. How do you get access to the tool? So we just talked about how to apply if you're watching this on social. If you're joining us today and you're watching on Zoom, then you already are a client. So Josh actually emailed out all the username and passwords to you. So do check your email. If you don't see it in your inbox, please check your spam because a lot of times things get flagged and they go to their spam folder. So check there. But if both turn up a no, then just give us a call, or you can shoot us an email at sbdc@laverne.edu and we'll get you taken care of. But so we do offer free consulting, but there are some rules to the road. I'm going to hit at the top of our broadcast today. And rule number one is be real with yourself. In entrepreneurship or in business planning, it's really built on a series of assumptions, and you got to be real with yourself and how you got to those assumptions. Because if you're not real with yourself, it's going to be a lot harder to implement. Rule number two is do it yourself. Although we do offer free consulting to help you through the process, at the end of the day, it's going to be your business plan. It should be done by you. Don't lose sight of the fact that the business planning exercise is the value is really found in the process, not the end document. The end document is great, but it's the planning process that's most valuable. And rule number three is to keep it simple. I'm a big fan of the KISS model. Keep it simple, silly. It doesn't matter if you're the latest, greatest app, or like me, I grew up doing in a family-owned plumbing business. We all follow the same rules, and those are sales minus expenses equals net income. Doesn't matter what you're trying to do. So let's keep it simple and focus on, simplicity. So anyway, this is the website we're going to be demoing today. We're going to show you how to create a business plan and how we work to help you at the SBDC to create your very own business plan. But right away, I'm gonna hit login up here at the top right. I'm using Chrome. You can use other browsers like Safari, Mozilla, or etc. We recommend Chrome because we've seen some performance issues with the others, but I've got a webinar account that I've created for today. I'm going to go ahead and click login, and I clicked the button. The website will take a little bit to log in. You can see it's doing something here, but give it about 10, 15 seconds to load because it's loading a very, it takes a little bit to load, just to say the least. But the website tool is very easy to use and very simple. Trying to follow that third rule, keep it simple. We're already on the page for the business plan. We can click to schedule an appointment, or we can log out. That's pretty much it. But down here at the bottom, like below this text that says business plan, we have these different tabs. And this is where we talked about reverse engineering the business plan into a series of questions and answers. We're going to go through each one of these tabs or sections, whatever you might want to call it, plug in our information. This is going to help us identify two things. One, the things we know, woohoo, great. And two, the things we don't know. And that's where we're going to have to spend some research or some time researching to develop those assumptions. Because we want to plan out this business, right? And we want to be successful. But all along the way, you will notice in these different sections, you've got these little, I call them tool tips, but little question mark icons. If you hover over and you click the button, it's going to take you to a link
Depreciation and amortization
of yours truly talking about the section. Why is it important? What are we doing here? And so it's kind of a bit of a self-serve tool, quite honestly, because most of our business owners, they're hot to trot. They're ready to go. Their bank needs this projection, or, I wanted to start this business today. So we want to make it as easy as possible for you to move through this process because it's not very difficult, but it is a little bit, I would say, on the detailed side. So let's continue on. I'm going to start with the company information section on the far left. And I'm going to go with Sean's TKD. I'm going to say LLC. What year is it? 20. I'm going to say we're going to do this business plan for next year. Right now we're 2024, but let's say we're doing the plan to start, January 1st, 2025. If you have a website, you can plug it in here. But if you don't have some of the content, don't feel like you have to fill in the box. We put some options here for you to consider, but fill in what's relevant to you. So if you don't have a website, don't plug one in. But if you do have one, there's a little bitty note here that says you have to include the HTTPS or HTTP://. So do include that if you have one. What the heck? I'll say HTTPS:// Sean's TKD.com. I'll plug in my email. My phone number, my name, and I have expedited. I cheated a little bit. I've plugged in some information here so you don't have to watch me type this entire webinar. But I wanted to do this section to show you just how easy it is to kind of fill in the box. So I plugged in my address, is our SBDC address here in Laverne, and that's that contact information. The next section you'll usually encounter with a business plan is going to be business description. And this is where we kind of tell the reader a little bit about the industry we're in, let's say martial arts, our top goals over the next 12 to 24 months. And you will see here, like I've typed in the text, but there's gray placeholder text to kind of not lead the witness, but give you an idea of some of the things you might throw in here to kind of help guide you along the way. Your mission, how is the company structured? We're going to be an LLC owned by one person. Who owns the business? How many years of experience do you have in the industry? Because that's going to be really important to your lender. If you're applying for a loan, it's like, hey, Sean might be an SBDC director, which is great, but if he wants to go start a Taekwondo studio, not really sure if that's, transferable skills. My son has a second-degree black belt, and it took him a long time to get that. But so industry experience is going to be really key. But aside from that, what are the key success factors for the industry? So here I'm saying, yeah, have a good reputation, the ability to attract local support and patronage, easy access for our clients, effective promotion, and access to a highly skilled workforce. So, this requires a lot of typing. And nowadays we can use our good old friend ChatGPT or like Gemini or any of these AI tools to really help us. I usually say plug in your information and then maybe lean on chat or an AI tool to kind of validate or verify. But when you're using any of these tools, keep it, how do I say, don't put any personally identifiable information into a system like this. So I keep it kind of generic. That's what I was going to say. So I'll say, first, I got to tell the AI who I want it to be. So I'd say, can you act as an experienced small business owner in the martial arts industry? And it's going to say, sure, why not? And then I'm going to ask it and then say, what will say, what are the top 5 key success factors for a small business in this industry? And now we can start to see, like, compared to our answers that we thought about, what does some of the AI tools think that, and just kind of for inspiration, so strong curriculum and quality instruction. Okay, that's good. Community engagement and reputation. Now we have some overlap. I talked about that. Flexible class schedules, membership options, focus on personal development values. Oh, I remember at my son's TKD studio, it was really the values were really important. And efficient operations and financial management. Absolutely. So I want to introduce this because now everything's all about AI these days. Well, AI is kind of baked into a lot of things, and this is how we can bake it into our SBDC, or our business plan. Kind of use that to help us populate some of the more narrative components of the business plan, which you'll see later on. But as we continue down this little section here, we've got, lastly, what are the major products and services we sell? So I'm going to say we do monthly Taekwondo memberships and belt testing because, well, one, I remember paying, for a monthly membership as a parent. And then two, I remember paying every time my son or daughter wanted to graduate to the next colored belt, they had to take a test. And that meant dad and mom had to pay $50 to take that test to graduate and break that board. And it was a great moment, but I'm sure that brought some money. So I'm just using this as a fictitious example. But again, like I said before, if the great placeholder text is we've used the plumbing, a plumber as an example. So like you'll see water treatment, water heaters, new construction and remodel projects. But I don't have 5 or 6 major products, so I don't need to fill those in. Again, less is more and keeping it simple. But at the very bottom, we've got 2 handy-dandy buttons. The first one here is to calculate, which we're going to see later on, to run the numbers. The website will not auto-calculate when you change a number. But the most important one is save. So I'm going to click save, and it will take 5 to 7 seconds. Again, it's a little slow to actually save your information, and we can then navigate back to it up here at the business plan page. But this is usually what most people want to see is they want this, document. So I can click this link here to generate the document for the business plan template. And this is where I said you're going to need Microsoft Word. But we've just completed the first section of the business plan. Now, we automatically include a table of contents, but all that stuff, key success factors, it just formats it for you so you don't have to worry about making this pretty document. Now, if you see some blanks here, as you're starting out on your business plan, it's because we haven't filled in that information. So as you fill it in, this will kind of, fill in. But this is kind of where we left off. Now, I've already plugged in some other stuff. So if you had only completed the section that we've done so far, you wouldn't see that. But we're going to continue on. I just wanted to kind of show you, like, this is usually what people are like, oh, that's what I need. I need to give that to the lender. But again, I want to emphasize it's the planning process. And we're going to get into especially the budgeting side. So I'm going to close this. And now to get back to the business plan, we're going to click this menu item back here at the top. Again, just like logging in, it's going to take 10 to 15 seconds, depending on your device, your internet speed, and sometimes even your browser. But a small price to pay for a free tool to help you get the, plan this out. And then we're supplement that with our consulting. So to really bounce ideas off of somebody, because the company information, let's be honest, is pretty straightforward. But now we get into marketing. And that's where we start. Ooh, everybody usually likes marketing. It's fun. So industry trends, I could go back to chat and say, I don't know, can you write 2 paragraphs about the industry trends in the martial arts industry? And it can write us some great stuff. We can show you other tools for market research that we have through the SBDC, whether it be demographic information or industry information. But chat's a good friend to lean on and pretty accurate as long as you're telling chat who you want them to be. But so my favorite tool for industry research is going to be like IVIS World. But that you usually need a subscription to. So if you're your local library or maybe you're a student at a university, you might already have access to that. But once we get down from high level industry, we immediately look at the target audience. very specifically. So here I'm saying parents with children between the ages of 7 and 14 who live near our location and make on average, let's say $100,000. What is our value proposition? Or phrased differently, what are the top 3 needs of our target customers and how do we meet those needs? So here I'm saying easy access. Well, how am I going to meet that need? I'm going to have a great location with ample parking and complimentary anchor stores. So mom and dad can drop off the kid and maybe get some errands done. We're gonna have great teachers. Well, we're gonna hire experienced teachers with a focus on all age levels. And of course, cost. These are just things that I'm just drumming up, but we're gonna be competitively priced with a 2-week trial offer to let people kind of take us for a test drive and really see how we live our values at our dojo. But whatever your value proposition is, I always say you're open up, you're 1, 2, 3, like what are we gonna really market our business on? And then of course, if they don't come to us, they could go to Josh's TKD. No, right? So here I've got, coolest TKD, Haya. I'll change Haya to Josh's TKD. And this is oftentimes in a business plan, you're going to see a section called the competitive analysis, where now this is where I'm going to have to use that calculate button down here at the bottom. And as I click it, you're going to notice that these names are going to get plotted across here. It's not math, but it's just something you have to do with the website we built. But there it goes. So now we gotta go line by line in terms of categories. Like, if I go back to chat and I say, what are the top 10 factors customers consider when choosing a martial arts studio? Or I read a blog or I Google it, I'm researching, what are the top 10 factors? These are the things that I'm saying are important for, someone, I think that when they're evaluating their decision-making process, because we all go through the same process. We have a problem. We search for a solution. We evaluate the solution, we take action, and we're either satisfied or dissatisfied. Well, we're on the evaluation stage when we look at our competition. So like I talked about, location and accessibility. So there's a little bit of bleed over from our value proposition, but if we go dive deep, is Sean strong in this area? Is parking, parking at coolest TKD is not the best. Maybe it's not well lit or it's really crammed and, I've got a big truck and, it's hard getting in those parking spaces. But most businesses that are established are going to know the usual suspects, I always say, and how you differentiate. But if you're a new business and you're just getting started, this can take some time. So joining other people's newsletters, secret shopping them, looking at reviews, what people love, what they dislike, etc. But taking time to understand where you fit in the competitive landscape, knowing that if they don't come to Sean's TKT, they could very well go to Josh's. And he's got a good dojo over there too. So, we work together. But where everybody always jumps to with marketing is the marketing strategy. Like, oh, what's all the cool tools we're going to use to let the community know that we exist? And so I'm right there with you. This section, we've got a little drop down with some of the major common marketing outlets for the clients we work with. And you can see we can list up to 8 outlets here. Don't feel like you need to use all 8. Honestly, businesses probably have a good 3 to 5 major things that they spend their time, their talent, or their treasure on maintaining and using to let the community know they exist. A website, maybe some email marketing, directories like Google My Business or Bing places, events. In our case, I put over here one of my favorite things when my kid was still doing Taekwondo was the movie nights, where we're going to host events to encourage the members to bring their friends to experience the studio while at the same time allowing mom and dad to take a date night with their friends. That was my favorite marketing outlet. But what did it do? It had my son or daughter bringing their friend to the dojo, experiencing the location, and going, "Hey, mom, dad," the friend's parents, "I want to do Taekwondo." Isabella does it or Joseph does it. This is ways that you're gonna, sometimes get creative of, what you're gonna do to market your business. But at the end of the day, it's gonna be an outlet. There's gonna be a cost, probably, even if it's just your time. And then we gotta explain to the reader, why is it even important? And what, yeah, why is it important? And that's kind of the who's who, if you will, for the marketing section. And now we kind of go over to the team. And so this is where we kind of start to straddle the narrative with the financial. Because usually when people come to the SBDC and they say, "Hey, I've got a business plan," we say, "Oh, send it over to us. Let's take a look at it." It's usually part of, they have the marketing, they have the company information, the product service stuff, but there's no financials. And this is where this tool can really help you. Where the first question it's going to ask us is, how many team members do we have? And we can list up to 10. I'm going to say 2. And it's just going to be me and Jane Doe. But for each team member, we have to kind of identify, their role, if you will, their involvement. Are they full-time, part-time, contractor, years of experience, and a little sentence or two, or maybe one sentence about what they're going to be responsible for. Because if I'm evaluating the business plan, I'm looking at your team going, okay, where are the gaps? Who's going to be in charge of accounting? I know that's not everyone's favorite thing to do, but it's very important. So we're looking at the team members. This is where I'm also talking to businesses about, like, well, how can I pay myself, assuming I have the money to do so? If I'm a single member LLC, I'm probably going to take a draw versus, an S corporation. May have to list myself on, do part of it on a salary. So we start using this business planning tool to start peeling back the onion as it relates to the opportunity that you're trying to evaluate. Or maybe just account for all your existing payroll to support, the loan application. But, in this case, I'm going to leave myself blank because I said here, Sean will be compensated via an owner's distribution based on the company's financial performance. I think, yeah. I'm the last to get paid as the business owner. I got to pay Jane and all my rent and everything first. So, but in case of Jane, I got an assistant instructor, someone who's going to be responsible for assisting with instruction, maybe new client signups while we're doing class. Someone walks in, they're like, "Oh, I'd love to sign up." Well, now I can continue doing the instruction, and Jane can help with the sales and marketing aspect. But Jane's going to cost, well, this needs to be updated. I think it's like $16 an hour now. And let's say Jane is working 20 hours a week. Now, another thing, as an employer, we've got payroll taxes to consider and workers' compensation. There's other areas where we could add percentages for retirement, healthcare, and other benefits if we offered them. But at a minimum, we have to pay for these. So now that I updated this number, let's hit calculate, and it's not going to change it a whole lot, but we have wages and we have payroll taxes. So out the door, we have a payroll budget. So when you click calculate, 5-6 seconds, but now we're at $1,500 a month. So the team section does speak to a little bit of the narrative, like who's involved with the business, but it also speaks to the financials now in terms of payroll. Well, how much is that going to cost you? So we have a $18,000 right away just for one part-time person working minimum wage for 20 hours a week, paying our side of the Social Security and Medicare. Next is really where the financials begin. And I'm going to preface this, we're almost done, believe it or not. The way once we get to past here on terms of these tabs, all these other ones will calculate themselves. So just heads up in case you're like, "Oh man, this guy's going to go on for a while," which we're getting there. But I'll come back to the starting point tab. And this is where, if we're starting the business, we basically need to list out everything we're going to need to pay for before we sell our first monthly membership. We take our first student. If you're an established business and you're doing a projection, this is where we're pulling your balance sheet and plugging those figures in here, because you probably have tenant improvements, equipment, or long-term assets. So long-term assets are usually things that are valued, they have a useful life of 1 year or more, and they're usually a little bit more expensive. Depends on your capitalization threshold. I know a fancy accounting term, but sometimes, $2,500 or more. But in this case, I'm saying I'm starting this Taekwondo business, so I'm going to have some tenant improvements that I'm going to have to pay for just to kind of fix up the space, some mirrors, some flooring, an office wall addition, some electrical alterations, all that fun stuff. Money gets eaten up a lot in tenant improvements. And I'm probably going to try to negotiate with my landlord. "Hey, do I have to pay for all this? This is your space. I'm going to pay you rent." But there's that negotiation aspect. But I'm going to need some equipment, a computer, a printer, a point of sale system, maybe. Furniture and fixtures, tables and chairs for our parents to sit and watch as their son or daughter is learning the lifestyle of Taekwondo. But even just with those, I got $40,000 in long-term assets to start this business. Now we look at more of the short-term assets, or what we're calling here operating capital. I'm going to say, yeah, we're going to need some prepaid insurance premiums because in order to sign the lease, I'm in the lease agreement, it's probably going to say that I maintain some sort of general liability insurance. Let's say that's $1,000. Inventory, yeah, we've got some merch that we're going to sell, $1,000. Rent deposits, ooh, that's a pretty penny. If I'm planning to lease a space, let's say it's $2,500 a month, my landlord, he or she may say, well, okay, Sean, well, I need $5,000 in a deposit up front. Because I don't know you. And it's technically my money that they're gonna hold, but I still need to give it to them. So that until I return it in pristine condition. Same thing with utility deposits. The utility, gas company, electrical, they may say, we don't know you. We need at least 1 month's, usual expense as a deposit. Supplies, $500, paper toner. I threw in here punching bags. Advertising, I threw in $3,500 for a website. I got a grand opening with the chamber and a big event. That's a nice amount. $500 for licenses, and although this last one it's called working capital. So when you start a business, you need to cover all these expenses, but you also need to have money in the bank. It's not necessarily a cost to starting the business, but it is definitely necessary. So I put here $20,000 initial cash deposit. So just to kind of work with. It's still, it's going to sit in our bank account, but we have that to work from. So if we add it all up, our total required funds for this Taekwondo studio is $72,000. Now, where's it going to come from? Well, now we get into this fun conversation about sources of funding. And we've got owner's equity, i.e. me, the business owner, or owners, outside investors, i.e. Sean's mom or dad, a commercial loan. We got a commercial mortgage if we were buying it. So anyway, you can check these off as you need them, but I'm just saying I'm going to pony up 40K and I'm going to look for a micro loan of 32,000 at 8.5% interest over 5 years, which is going to give me my monthly payment of principal and interest of $656. And that's going to start month one, day one, or, in January when I start this business. And then what banks love to see is a little sentence about a narrative. So the starting point costs are based on projected startup expenses for the business and determined to be $72,000. $40,000 will be contributed by the owner, and the remaining $32,000 is to be financed via a small business loan at 8.5% over 5 years with repayment beginning in January. Nice. It just kind of buttons it up in terms of you got the numbers, but write a little sentence or two about it. If I was playing SBD, playing devil's advocate, I'd go, oh, your term is a little long there. Most microloans are going to be 36 months. So maybe we need to kind of adjust that and kind of hit run calculate, see what our payment is there. Let's see what that is. It goes from 656 to 1,000. Oof, okay. But this is where we start playing with the numbers. And it's like, well, whether we can put that money together or not, and whether it's at 8.5% interest or 10. I mean, now interest rates are high, let's be honest. But now we can start putting together this projection and start playing with the numbers. But I do want to look here at the chat, Josh is the one dropping things in the chat. It doesn't look like we have any questions, but I will we're just going to go through this and we'll take questions at the end. I think that might be best. But we've got our starting point. What we just did, our established businesses are just going to plug in their numbers for pretty much how much cash you have, your rent deposits, everything that's on the balance sheet. But for our startup businesses, what you're doing is you are creating your balance sheet. And this is where it's really important as we could talk another webinar about setting up a bank account and then setting up your record keeping so that you're actively tracking what you're contributing to the business and your liabilities. But this is our beginning balance sheets. Assets minus liabilities equals owner's equity. So the next tab is one that you're going to love because you don't have to do anything. It's automatically calculated. I just wanted to include this section so you know where we're getting these figures from that are called depreciation and amortization. The big thing here I just point out is you can't, the only expense to that loan is the interest that is being charged on it. So you can't write off your principal on a loan. And that's going to be reflected on our income statement. We're going to have our interest expense for the year. But you don't have to worry about anything here. This is auto calculate. Just wanted to include it to show you how we get to the numbers. But like I said, it's sales minus expenses equals net income. And these are the last two major areas that we're going to spend time on. And I'll be honest, the sales section is probably the harder section of the two. Expenses, pretty easy. They're hard and fast. I mean, we want to, do our research on making sure we account for them all. But the sales is a little looser or harder to put your, pin down. So here's how this section works. First, it's going to ask us how many major products or services do we sell? You remember back on our company information section, we talked about pretty much 2. We can list up to 6, but we are selling memberships and belt tests. The units isn't really a number. It's kind of like how we sell them. Is it by the student, by the pair, by the dozen, each, that kind of thing. But each student will pay us, assumably, $120 a month. And our belt tests, each student will charge $50 a month. And I've included a small cost of goods here. So every time we do a belt test, I'm saying $3 for another belt and a trophy. Because I remember my son and daughter, when they would graduate, they would get a nice trophy they would take pictures with, and then their belt. It's not really major costs, but there is a variable. Every time we do a belt test, I thought I'd throw it in here. You can account for it as a regular operating expense, like a supply, but I wanted to show you how this section works. And what I'm doing now, this is our menu. This is what we sell. Down here under our monthly unit sales, we have to list out how much of what we plan to sell per month. So January, I'm saying, and this is what you're making the bet on if you're the banker, or maybe Sean's mom making the investment. Can Sean get 30 students in month 1 to come to his dojo and then grow by 5 students per month until he reaches 75 students? And then flatline, I'm going to say maybe that's our goal. How long is it going to take Sean to grow from 0 to 75 students paying him monthly to attend his Taekwondo studio? I'm putting forth the argument to mom, wife, or spouse, anybody who's investing or willing, that I have 30 students that are ready to go. I've been teaching. I have that industry experience that I think I can, get a group of 30 kids to start coming to learn from Sean's TKD month 1. My next assumption is that we're going to do about 20 belt tests on average per month. And all we're doing here to get to our sales forecast of down here, 4,600 or $60 in cost of goods, is we're multiplying 30 times 120 plus 20 times 50 to give us the 4,600. Now, with the belt tests, we do have a minor cost of goods, so we're doing 20 times 3 to give us a cost of goods. Because every time we sell a belt test, or we conduct a belt test, usually it's in groups of like 20, that's why I picked 20, we have to buy these belts and buy these trophies. So that's pretty much how you're going to break it down, in addition to writing out what you're basing it on. Like I just said, that we have 2 main revenue sources, monthly memberships and belt tests. The revenue projections are based on starting with 30 students in month 1 or January and ending with 75 students by the end of the year. The business plans to maintain an average enrollment of 75 students each month throughout year 2. Each membership costs $120 a month, and the business is projecting to grow by 5 students per month during the first 10 months based on marketing efforts. Okay. Additionally, students will be offered belt tests once per month that cost $50, and on average, 20 students will be tested each month. There's a small cost of goods for the belts and trophies. That part is really important, because looking at your financial statements, if I'm a banker, an investor, if I'm Sean's mom, I'm going, what is this based on? When I have something here that tells me, narratively speaking, what it's based on, now I can kind of go, okay, yeah, Sean's pretty good with marketing. Yeah, he's been doing this here. I can start to get behind your numbers. But if I don't have a narrative to explain or give me any guidance as a reader, I'm I'm left to my own assumptions, and you don't want to, you don't want to leave them to their own assumptions. So, but here, based on those numbers, we're looking at doing about $100,000 a year, small cost of goods, and this is what we call our gross margin, our gross profit. So we have this amount of money to cover, uh, well, rent that we're going to look at next, but we already looked at payroll. That was like 18,000. So we're going to start to see, are we making enough money or are we making not enough money? So I think $1,000 was going out the door just in that loan payment that we looked at on the starting point tab. But there is, and the last leg of the tour is the expenses. And these are coming from these operating expenses. What expenses do you have to pay for just to run the business? Outside of payroll that we already took care of, financing activities, and costs of goods, we're going to have things like advertising, contract labor, not included in payroll. What did I have that for? So as you check these off, they will fill in down here. So you can plug in, or, check what you need, but we have to do a budget. So I'm saying 500 bucks for, ads, a website on average, and I kept it all even. You could, be more specific in terms of like, well, August, we do a lot more advertising, because the days are longer during summer. So this is just an example, but we have to budget now on the expenses. Contract labor, oh, it was a bookkeeper. If you don't want to do bookkeeping, you gotta it's either do it yourself or hire it out. So I'm saying 100 bucks a month from, a bookkeeper. Insurance, I say $1,000 annual general liability insurance. You could pay that insurance monthly, quarterly, annually. This is where now we start looking at the cash flow of things like, are we budgeting for them in the right months? Legal and professional, $500 annual tax filing in April. Okay. Licenses and permits. We have 800 bucks in April for our LLC fee. Oh, and 200 bucks for our city business license. Rent or other property. That's that storefront that we're leasing with a 5% increase in July of year two. So 2,500 goes to 2,625. Not a big jump, but important to account for. Utilities. And so out the door for year one, we have about 3,500 bucks a month. Some months it's a little bit more. But these are the expenses just to run the business. So you can see how it's chipping away at our gross profit. And we're going to see now if we're making enough money. Actually, I take that back. We have one more thing, and this is additional information. So if we had receivables, we could account for it, but it's defaulted to just a cash-based business where we get paid within 30 days or at the time of service. And the same, we pay our vendors, we pay for our rent up front. You can plug in some assumptions for line of credit. Like if we wanted to have at least $2,000 in the bank at all times, and then we had a line of credit, let's say 10%, if we ever drop below $2,000, the website will calculate, our line of credit balance and any interest we owe on that. Oh, and then you got Uncle Sam. Yeah, we got to pay the federal and state taxes. So I'm plugging in 30% for that. And we're not planning to buy any other fixed assets in year one. But that's the additional information, and the income statement I'm going to skip over, and I'm going to go straight to cash flow. And reason being is because cash is king and cash flow is queen. And if we're out of cash, we're out of business. So when I'm doing a lot of budgeting with businesses, whether it's to prove you can pay back the loan or it's, determining, the feasibility of a new startup, I'm really looking at the cash flows, the ins and the outs, and that's what's demonstrated here. So with a cash flow statement, we have a beginning cash balance of $20,000, which we said on the starting point that was down here, our working capital. We were going to have 20K in the bank to work with. Okay, woohoo. Now, if I go back, we look at all the cash inflows. Cash sales is 4,600. That came from our sales tab, where we said we were going to do 30 month students paying us 120 plus 20 belt tests in that month, paying us 50 bucks. Add them up, we get 4,600. And we're a cash-based business, so we get paid up front for the month or within 30 days. So our total cash inflows is 4,600. Now we got to look at the cash outflows. No, not fun to talk about. We just want to make the money. We don't want to spend the money. But we have a minor cost of goods of $60 to bring in that 4,600 for the belts. Our operating expenses of 3450 came from our expense tab, where we added up our advertising, our bookkeeper. We had no insurance that month because we pay it annually. Adding up all of these expenses gives us the 3450 just to operate the business. And then we have payroll, 1,500 bucks for Jane. Um, and taxes we don't owe yet. And oh, that pesky loan payment that we said in on the starting point tab. We were going to pony up 40K, but we were going to get a loan for 32,000 at 8.5% interest over 3 years, which was principal and interest of $1,010 because that's got to be paid in cash. I talked earlier about you can only expense the interest part. This is why I focus on cash because well, you got to pay principal and interest with cash. Cash. Sorry. I guess I like that word. So if we add them all up, 6,000 going out, 4,600 going coming in, we obviously have a negative cash flow for the first month. Not great. But we had 20,000 to begin with. So 20,000 minus our losses for that month gives us $18,000 to start the next month. And it's a rinse and repeat from there. Now, we didn't drop below 2,000, so we didn't put anything on a line of credit or a credit card. But what we can see now is our net cash flows. So they're going low, low, low. Okay, now we start to make some money at about month, what is this? May. So it took us about 5 months. But all these losses, every month that we're not hitting our break even, we are losing cash. And that's okay as long as you have enough cash to get you where you want to go. And that's where I usually say cash in the bank of a business is like gas in the tank of a car. You never get into your car to go a long distance without first looking at that gas tank going, do I have enough to get there or am I going to need to refill along the way? This is the aha moment of doing the business planning. And before we open it up for questions, we are making money here, but is it enough to get me out of bed? 12, this because I said we're the last to get paid. So this is kind of the free cash flow that you have to pay yourself. But let's look at year two. Maybe year two a little bit better. Yeah, now we have about $30,000 of net cash flows after we pay our expenses. And we are including, where is it? Taxes on this money because we said 30%. Where are my taxes? Here they are. So we're setting aside money for our taxes at whatever rate you want to budget for. So that is included there too. So this is what free and clear we have to work to pay ourselves, to get ourselves out of bed. So it's kind of a fun thing to play with the numbers, and then we can start tweaking them and going, oh, what if we paid Jane, 1,750, or we hired two Janes, what does our break even need to be? Well, that's the best part about doing this budgeting or business planning exercise is this break even analysis. Basically, we have a service-based business, so we have pretty much 100% margin. But for my product businesses or businesses out there that have a cost of goods, this is going to be important for you. But we have fixed expenses between payroll and operating expenses about $70,000. For operational for 12 months, we need to be doing about $5,700 a month in sales, which translates based on our percent of revenue to about 42 or 15 belt tests per month. So as long as we can hit that, we are covering our expenses. Now, our salary is not part of that. So if we wanted to bake in our salary, and let's say, let's go with, I don't know, I want to make $50,000 a year. 50,123 divided by 2080 for the average number of hours in a year for 40 hours a week is 2404. So 24 times 40. If I were to calculate this, now this is going to bump up our payroll costs that's now going to be included to see what that break even might be. So now we're at 70,000 roughly, and we need to be at 73 and 26 belt tests. So every month. Now you notice in the first month we were growing. So we started with 30, we weren't at 70 right away. But this is kind of the fun part of doing the business plan. but at the end of the day, there are three ways to grow a business. One, increase sales, but easier said than done. Two, cut expenses, but quite honestly, we most businesses are working from a bare bones budget, but still important. Shop around, Um, and three, improve your margin. Based on what we sell, is there a way maybe we can charge $150 or $150 a month as opposed to 120? Will the market tolerate that based on our competition? Do we think there's a lot of factors that go into pricing? And Josh has a great, I want to say, article or video on pricing too on our blog. But what is the price at? We don't have really a cost of goods, but if we did, could we get that cost down so we have more of a spread or more of a margin on every dollar that we sell? But yeah, that's kind of our tool that we use here at the University of La Verne to help businesses through this business planning process. Oh, well, I kind of shared with you out of the gates, but now we can hit save and we can download it and get that, pretty document that everybody wanted to have. Hold on, click it. And to be able to share with others, and then you can edit it further if you wanted to add like more pictures and stuff. But now this is what everybody's like, I need the business plan. But this is a formatted business plan, quite honestly, that I say looks looks professional. It's got a table of contents that, yes, we might have to right click and hit update field, update the tip, to get the page numbers right. But it's a short business plan. It's about 10 pages of narrative, 10 pages of financials. But this is what a lot of people are kind of, you might have to go through and clean up some stuff, if you don't have these bullet points, stuff like that. But it gets you, I'd say 90% there, maybe 95, to be able to have a document to share with your bank if you're looking for a loan. Your landlord sometimes will ask you for a business plan, but it looks professional, and we all eat with our eyes first. So when you hand someone this plan, they're like, oh, good. Whether they read it or not is a different story. But that's what I've got for you folks today. Do we have any questions? Let's see here. A Q&A button. No questions, right, Josh? All right. Well, then I will leave you with this. I will say check out our Learn Worlds website. We can put the link in the chat. We have a lot of other great workshops that you can learn at your own pace. It's lavernespdc.learnworlds.com. Everything's free. And then sign up for consulting if you want to have some help putting into practice, or have someone kind of riding in that sidecar along with you, kind of as you develop your business plan. All our consulting services are free and easy to sign up. All you got to do is visit us at lavernespdc.org. Click this little red button that's on the homepage. Scroll down to where it says no cost advising and make an appointment. That will take you to our application process where you enter your email and you create a little password. And once we receive your application for our consulting, we call you back and see about scheduling you to meet with one of our advisors, either in person or online. But until then, I'll say thanks for watching, and we